Hello, welcome everyone. We just did a sound check and I hope it's all working. We are at our monthly PUG meeting and we have a few questions to go over today, as well as a image that someone sent in and who would like me to go over that. So the question was, the format is we traditionally take questions by, people can do them by email. If there are no questions, then it becomes a very short review. And we say goodbye. If there are questions, I also give the opportunity for those who are attending live to type in their questions. And for those that may live abroad who would be nighty-night bedtime right now, like in Singapore, I respect that wholeheartedly. And so we will address those questions for those so that they can watch the review later. 1 Adam 12. All right. So let's get into the meat and potatoes of things. What does PUG mean? Person's user group. It has to do with any of our indicators on all the platforms that we use. And so therefore, we come as a group, as a customer, I guess you want to call it appreciation or follow-up service to answer your questions in this period. So this is kind of like your time, and it's my privilege to help you guys. So with that said, please take a moment to read this risk disclosure. Trading involves risks of loss. Stop limits don't necessarily limit the losses. And with that, let's get into the first question today, which I believe is hidden behind this. And it should be where? Where's the first question of the day? You guys probably won't know because I buried it somewhere. Interesting. Where is it? There she is. Okay, great. So let's expand this chart. We're going to go with this one first. And let's go with plus. This is actually a screenshot from the Daily SPY. And the question is, John, if you have time, and I would appreciate it if you could spend some time on the enclosed screenshot. On the SPY Daily, attention to the JP MIC oscillator, which is the one at the bottom, would be greatly appreciated. Attention to the JP MIC oscillator would be greatly appreciated. Believe you have changed a little and is more understandable. The JP advanced decline is a must to keep an individual out of trouble. Okay, so I guess the first and foremost is what we have in our algo room is actually this chart, because as the question was from Jim, what is the advanced decline and how does it keep traders out of trouble? Well, if you're trading the S&Ps and if you're an E-mini S&P futures trader, it's nice to see what the condition is of the market. On an intraday basis, people will look for, in the old days, we would look at the tick extreme readings. And the tick was data that was taken from the NYSE. Aha. We don't trade the NYSE, do we? No, we do not. Now, a gentleman by the name of Sherman McClellan came up with an idea of an oscillating methodology of extrapolating the data from the NYSE advanced decline and using a series of a moving average and using a kind of like a MACD approach, moving average convergence, divergence, is the idea I added with the MIC oscillator. And the MIC oscillator, McClellan oscillator, basically what it did was take a moving average approach to the breadth, advancers versus decliners. And so what you see on your screen and what you would see on our page in the person's user group or the trade station, and this is where this comes from, it breaks down what the advancers are, it's color coded, and what the decliners are. It's set. So you could look at, on this particular screenshot, if you look over in the right corner at 195 under advancers, this was 195 stocks of the S&P 500 were positive on the day. That's advancers. Decliners, 303, were down, and then the rest would be assumed to be unchanged. The chart underneath it represents a cumulative tally of the advanced decline day after day. So we took something and used a component of a moving average. And yellow is a short-term moving average, blue is a longer term. And all this is a moving average of the breadth, which smooths out the movement. If you look at down below the orange line on the JP MIC oscillator, you will see it slightly varies differently. You can see that this is rounding top goes down then up, rounding top goes down and then up, but this makes a newer high. This does not because, and I'll get to that in a minute. But as you can see that the McClellan oscillator and the advanced decline cumulative line kind of move in the same direction. It's not 100%, but it moves in the same direction, right? I mean, you can clearly see this looks a little bit more pronounced than it does up here. With the advanced decline line, I took a simple moving average, a short term and a long term. And it has been my observation for the last few decades, probably 3 now, at least since the late 90s and the early 2000s. I decided to start using this more aggressively when we went in after the crash in 2001 in the tech wreck, I guess we want to call it more aptly. And it wasn't until about 2000 and I think it was 2008 or yes, it was 2008 or 2000, late 7 or early 8. I have to double check. I was invited as a keynote speaker with 4 men. And it was funny because it was the International Federation of Technical Analysis Society, IFTA. And they flew me along with pretty much every technician under the sun. On my plane, it was in Sharm el-Sheikh Resort in Egypt on the Red Sea. So we had to fly into Cairo and then get a domestic flight from Cairo to get to Sharm el-Sheikh. On that flight from Cairo to Sharm el-Sheikh in Egypt, that flight had Marty Pring, myself, John Murphy, Connie Brown, Tom Dorsey was on it, Sherman McClellan and his new wife, I forgot her name, was on it, and I think we already lost Sherman McClellan, unfortunately. Who else was on that flight? There was, and then Larry McMillan, and it was kind of a joke. I said, if this plane goes down, then every people won't know how to trade technically. It was a international federation. All the technicians around the world that annually did this. It was an honor to be one of the top 4 keynote speakers. And what I was there was Marty was doing his thing on his KISS system. I was doing person's pivots and Sherman McClellan, which explained his McClellan oscillator. And I came up with that and learned a little bit more about how he got behind using it and had a great time at dinner. And you get to know these people and you're one-on-one and it's all professionals sharing their ideas. So long and short, Ian McGinley was another guy. McGinley. Ian. Forgot about Ian. He's another guy. Anyway, long and the short of it is Sherman McClellan thought that, the breadth of the market has always been back in the early days in the 70s. It was always something very powerful to watch the direction, which is considered the strength of the market. So, fast forward now, we're not trading the NYSE. And so I don't look at the tick. So what we trade is individual markets. And now with cap weightings and ETFs and index funds, it's probably more important to look at the sector you're trading at the strength of, is it one stock, one cap weighted stock moving the market, or is it a bunch of stocks? The more stocks that are going up and trending up over a period of time, the healthier the market is, the more bullish it is. And so bottom line, Jim, to answer the question, is breadth important? And you, I think, insinuated the advanced decline is a must to keep individuals out of trouble. And it's true. If you're bearish the market and the advances are like 380, now think about it. What's 70% of S&P 500? 70% would be 350. 75%, 80% is 400. If you have 400 stocks positive on the day, that's pretty strong. A majority of stocks are all up, and you're looking as a day trader to sell rallies. It's probably not as fruitful than to maybe look to buy dips. So the advancers, the general rule of thumb is on a strong advanced decline, and when the market's under a condition of stronger and more, there's more advancers than decliners, you're more apt to want to be buying the market. The reverse is true, and with the McClellan oscillator, Sherman McClellan came up with the idea of using a moving average component, and it had a zero line, an overbought reading, and an oversold reading. When the line got in the McClellan oscillator, I believe it was like 160. Everyone has their own different thresholds. It was overbought and prone. If everything's been up over a prolonged period of time, it's more prone for relative weakness. There's another trick to it at the zero line. If the McClellan oscillator actual number broke and closed below the zero line, we called it a zero line break. If the market was below the zero line and came back up and tested the zero line and failed, it was called a failed zero line breakdown. So in other words, the zero line acts as a resistance. It doesn't generate a buy when it crosses over. I came up with the idea, I'm not trading the NYSE, so we created and added a couple other things. I thought that momentum behind the McClellan oscillator would give us kind of a heads up if things are improving or weakening. And so we have several things on the McClellan oscillator, which I know we have videos on in our website, as this is a tool from our VIP package. We created this, and basically on this chart, this McClellan oscillator comes from that data. If it wasn't for this data, then this McClellan oscillator would be using the data from the NYSE. The reason it doesn't say John Person's private personal indicator, because I give respect to those, and so that's why it's JP Mick Os. So it's the McClellan oscillator modified by John Person. First and foremost, this indicator is based on the data from the S&P 500. So if you use and I hope I can now switch the chart so that we can go and share with everybody where what the difference is. We have right in front of you 4 major indexes that we trade. And the MIC oscillator, this is the MIC oscillator for the Dow Jones Industrial Average. So there's only 30 stocks in the Dow 30 average. So basically this wasn't that hard. The MIC oscillator, JP MIC oscillator, is different from the McClellan oscillator in the sense that this is based on its information from the Dow Jones Industrial Average stocks. So if more stocks, 25 out of 30, go up, and it happens 2-3 days in a row, the McClellan oscillator is going to show powerful upside and trade north, above, positive, the zero line. We also use the concept that if it gets into an overbought territory, around 3.5 to 4 is traditionally an overbought. And remember, with the McClellan oscillator, it's based off the NYSE, and there's like 1,895 stocks in that. There's only 30 stocks here, so the readings will be slightly different. With that said, and just to keep kind of an informative, educational perspective of how to use this, if you start to see that the McClellan oscillator is forming here's a situation where it actually formed a potential a positive zero line reject. It crossed above it, it came back to test it, and it broke and closed back above it. So it generated a follow-through strength, stronger number. The McClellan oscillator that I created takes in account of several different types of moving averages and also shows a momentum indicator behind it. So it's several indicators within one. And it'll do several things. It'll show an overbought level, an oversold level, a zero line reading, and a condition when it's improving, meaning the red bars are getting less negative, and it's showing improvement by the momentum indicator getting more positive. When the stock is sitting here and it's tired or moving sideways and the momentum retreats, or if, for example, it makes a new high and the momentum isn't building strength, it may indicate some relative weakness in that rally. Too many stocks are going up, but they're not going up by a lot, if that hopefully is clear. So I use the McClellan oscillator on this just like I would the theory of how Sherman used it. But the only difference is that this information is based on the index you're trading. So that if you took the MIC oscillator here and you wanted to trade the S&P 500, while the two indexes are fairly close, you will note that they look a little bit different. They also look different if you look at the Russell 2000. The MIC oscillator here is not the same indicator. In fact, you'll notice it looks a little different than the Dow. Why? Because this is based off the information from the Russell. So the MIC oscillator takes its information. The theory is based off Sherman McClellan's work, but my settings that we built into it. Same structural theme of how to use it. With the McClellan oscillator, it shows again, overbought, oversold, zero line crosses, and bullish and bearish convergence divergences. In other words, if a market makes a newer high, breaks out, and the relative performance isn't getting any stronger, it's starting to give you signs of concern that too many stocks have gone up and it's overbought. So therefore, you can use convergences as well. Market makes a newer low and makes a new closing low, and the oscillator doesn't make a newer low reading, it'll give you an indication you're getting near an oversold. Too many stocks are too negative on a day-to-day basis. And then when this index makes a new low, if not all stocks are making a new low, confirming that price low, again, let me repeat that. If the indicator does not make a new low and price does make a new low on a closing basis, because this is a end of day tool because it's a daily chart. It's comparing the advancers and decliners versus one day to the next. So over time, you had a low on this date here, which, just to make sure we're all on the same page, of January 21st, market had a rally, had a stall, broke back down, and then finally on the 27th, 6 days later, the market made a new closing lower low. The McClellan oscillator did not follow through and make a new lower low. If all the stocks or more stocks were going down, this would be showing there's a low. What this signifies is that while the index was going down, this could have been a false low because not all stocks were also showing more relative weakness. Less stocks were, because that's how the indicator created this convergence pattern. So if the indicator makes a higher low when prices make a lower low, then you have a setup for a rebound or an oversold dead cat bounce, so to speak. So that is the McClellan oscillator right there. And the difference between the concept of the McClellan oscillator is the same with convergences and divergences. It's just that I broke it down and created, and we wrote into the program, thanks to Thinkorswim. TradeStation allowed us to do this way back in 2009. So this has been going on for, it seems like, just yesterday. And I can't believe it's been 13 years. Wow. So this has been something that has been useful in the sense that we've broken down, since the Qs, the NASDAQ 100, has different stock components and different weightings than the Dow. The Qs have different component and weightings than the Russell. Now, the Qs have with technology, have a strong influence on the S&P 500. But as we all know now, with technology like Netflix going down, it has less impact on the S&Ps, more impact on the Qs. Technology stocks have more weight on the S&Ps and the Qs, mostly, more importantly, the Qs. If you notice today, where we are with the McClellan oscillator relative to the Qs, it formed a zero line. It didn't reject it because we need to see at least 1 to 2 more days to see what happens. It could positive close, or it could see that zero line reject. But either way, you note that the market, the McClellan oscillator or the JP MIC oscillator, did not cross and close positive above the zero line. If it did, it's actually negative 0.46. It says the reading right here on your screen. So if you take a look at the very least, if you want to say, well, are you sure, John, it looks like the same indicator. Are you sure it's a different indicator? It's a similar indicator, but it's based off different data. If you take a look at how can I prove that to you? Well, real simple. The breadth of the Dow or the McClellan JP Mc oscillator over on the Dow is well above its zero line, significantly positive, and with the Qs, it's actually negative. So if you're trading the Dow and you're looking at, hey, it broke out above the zero line, or for example, if you're trading the NYSE, look, we got a positive zero line cross, and you went to go buy the Qs today on the open using this data, you got hurt, because using this data to trade that index would not be correct. And that's why my work is a little bit more succinct and the devil in the details, so to speak, because if you're using the McClellan oscillator based on the NYSE, the New York Stock Exchange Composite Index, and you're trading the Qs or you're trading the SPYs, it might not work well for you. So if you're trading the S&P 500, we look at the S&P 500 data, and that's why in our algo room, we have pretty much that exact, this is the algo room. So what do I have in the algo room running? Since we're day trading the algo on the ES, and we have a 60-minute model on SPXL, the leveraged ETF on the SPY, and also the SPY model, we want almost all the best information to give us the edge. Since the breadth of the market is a unique indicator unique to the index itself, we have the actual broken down advancers versus decliners. We have the cumulative advanced decline line, and then we have the JP Mc oscillator. We also have my volume indicator, stochastics, and then hidden here, not in focus, is on balance volume. So if we really wanted to say what is the condition of the market, from a stochastics, it was a little oversold. McClellan oscillator on the SPY just breached yesterday back above the positive line. It was positive. It gapped higher. It's still, even though the SPYs, they ended up positive, or they are positive just by a tad, the McClellan oscillator buying dips today was, at one point, probably a better course of action. So with that said, that's how we look at, again, the McClellan oscillator. Here's the indicator and the trades that are color-coded. Red are losers, green are winners. And so this is today's daily trading range, and we have this running 24 hours in our live trading room. And generally speaking, since the overnight action, we also have the Bitcoin futures running at the same time. So people can take a look at, just as a side note, take a look at the GBT, or not the GBTC, but the Bitcoin futures model with a 15-minute algo system running 24 hours. So the same story. Red, no bueno, it's a loss. Bright blue is good, and it marks it on the chart. It shows you what the entry is. It gives it kind of like two different ways. It points an arrow, meaning it's short. It gives you an entry arrow where the entry is. You have your initial stop, a trailing stop functions. Then when market moves down, it shows the emergency stop is orange, and then a trailing stop, in this case, taken out. So that is the Bitcoin. These are both models, same thing, runs 24 hours. But during the day in US Open Outcry, we have we encourage folks to look at the advanced decline, because it gives you a kind of sense of if the market's truly strong or weak. All right. So I hope I answered that question in complete detail. Attention to the JP Mc oscillator would be greatly appreciated. So I think we kind of covered that greatly. Covered that. All right. So next, let's move on into another question, if I may. And this has to do with a scanner, and we have two questions. Whenever I run JP5, sell and sell, it's the trilogy. No, JP5. JP5 is not, the funny thing is it was replaced. JP5 was replaced. You could just eliminate them. I'm so sorry. I thought you were referring to what JP5 did was replaced with the trilogy buy and sell signals. So JP5 is not really anything of significance anymore. So the JP5, that's why it says daily buy when weekly in a buy mode. It's JP daily. It's number 5. It is irrelevant. It's 1, 2, 3, 4, and trilogy. So I apologize for that. We ought to just get rid of the JP5 and then just do another release. So that's why you're getting an error, because it was replaced, number 1. So it's if you scroll over it, it actually says a daily buy when weekly's in a buy mode. So I mean, that's number 1, daily buy when weekly in a buy mode. So it's irrelevant. So that's that deal. All right. Next we have, so that was an easy question. It was, I wish that would have been something you could have just sent. That's a general question of your application having a problem. I'm going to put that over here and put that on a shopping list of definite things to do in the top 5 things. The next comes from a different Jim who says, I'm a VIP PUG subscriber and connect to the trade room on most days. I have a question on the 5-minute ES model that John sells in the algo room. Well, that's more of a question in the algo room, and I can answer that. The question is, what are the profit and stop loss targets for that model? It's not based on an absolute profit loss target or percent gain. It's a complicated formula. Yes, it is, but we can go over that, a quick review with you guys. If you're in the room, Jim, if you're here listening tonight, I'm pretty sure I try to keep things with anonymity. It's a good question. So I don't think some people don't want their names out there, and that's okay. And that's where bottom line. So if Jim, your question, you can ask that in the room and we can review that in the trading room. Okay. Let's see. Different question from Dan. It appears that this is a fading system. The buy signal can only take place when the PMC is positive and vice versa. Am I correct? No, not at all. If correct, why not just follow PMC? All right. So this is an entirely new question, and it's more, and it is about person's indicators. So for that, we're going to turn over to Thinkorswim. I'm not quite sure exactly what appears is a fading system. The buy signal can only take place, and I'm not quite sure. I'll try and answer the question best as possible. The PMC indicator, the person's market catcher is what we called it, is a relative strength indicator based on the S&P 500. So that's first and foremost. On the charts that you see here, this is also the main room. We have the SPY, the Qs, the Russell, the diamonds. Then we have stocks that we are looking at are influencing the overall market. 1 of Google, 2 of Microsoft. Trades that we're interested in, such as Tesla, which had earnings, which is now positive by $50 from its close, more or less. Schlumberger, a position we have, Verizon, National Oil, well, Barco, which was a trade that showed up on our trading scans. As you can see, we're looking at a bullish convergence. A volume price made a little dip and on very, very thin volume. Lower price level, higher volume reading spells bullish convergence. So, and then we have Valero, another energy stock that a position we're long in, and then Hecla Mining, metals and mining, one in which in the live trading room we were suggesting to buy half here, maybe half there, and you don't want your stop. You want your stop below that red line, that last additional change. All right, so enough of that. Let's go to maximize this sell and get right into things. The PMC indicator is nothing like the JP McClellan oscillator. The PMC is measuring the pace of change in terms of percent move to the S&P 500. It's a relative strength, comparative relative strength indicator. It's not Wells Wilder's RSI, relative strength index. It's a relative strength, comparative relative strength tool. And it compares the percent change, because a $6 stock cannot compare to a movement in terms of price to the daily swings of the S&Ps. But we can handicap or put things on a level playing field by doing what? By simply doing in terms of percent change. So if this stock is up, I don't know, 0.15, a penny is 0.15%. If the metals and mining on a daily basis, if you look at this, we're looking for the market to show improvement relative to the S&P performance. So with Hecla Mining, what you see on this chart is my little trend lines that I drew in number one. And what we were probably sharing here is from the average of these highs to this high, the market made a new higher high, and there was subsequent higher volume, which supports that move was healthy. It wasn't a false, weak rally. It also suggests that the next dip, one could be a buyer. And so you'd look to buy support. So on dips, buy support. So a couple of days ago, we said, or I guess yesterday, in fact, I said, if you wanted to buy against weekly support, market could go a little bit lower, but let's just look, since it's, not really all that great of a big deal for longer term investors, not day trading. Longer term investor would be maybe, 3 months to 5 years. You could buy Hecla 50% near support and 50% just in case it got down a little bit weaker, could buy at the bottom end of this channel. That's why we have a last conditional change. And if we're wrong, you want to be the hell out of Dodge if it breaks that line in the sand. So it was a scale-in approach using Person's pivots and higher time frame analysis. What do I usually use? Weekly and monthly work. On a weekly chart, you can clearly see, yeah, we're not buying it cheap, but we didn't buy the high. So buy some here, buy a little bit more. What if it wants to remain in a trading range for the next 5 years? I mean, it does like Walmart did a decade ago, goes in a sideways range. Quite frankly, we're in the highest inflationary period ever. And the funny thing is, some of the metals and mining stocks haven't really exploded off the chart. So if one wants to believe that metals is still and commodities is still a hot place, you can lightly scale in over time. So that was the concept. But if prices go south, we don't want them to take out older support, and we certainly don't want to take out what broke the market up. All right, so that's got nothing to do with PMC or McClellan oscillator to a degree, but also we talked about the volume, and I want to talk about now the PMC. So the person's pivot indicator, PPS study, the buy signal right there, that's not a fading system. Here's a sell signal there, it went down. The market finally reversed and went into a buy signal here, and it generated it on the close. It would be blinking when it hits a threshold, and it locks solid when the market closes at or above that threshold level. So this has been Hecla Mining's been in a buy signal on a weekly buy signal since February 21st. At that time, it went into a buy signal. The PMC indicator was showing that the relative strength was starting to improve. There's 4 colors on the PMC: bright blue, dark blue, red, fuchsia. There's a 0 line. So when a stock is in a downtrend and it starts to bottom out, if it's going to behave bullishly, you might see a basing action. You might see a rounding bottom, similar to what you see here. And you'll see volume start to show a trend of maybe higher high and higher lows. But the relative strength should show improvement in terms of percent change relative to the S&P 500. So the PMC is not a fading system. It doesn't really generate buy or sell signals. It just confirms momentum and performance strength or weakness. And this is the key. In you're looking for buying opportunities, you want the momentum or the relative strength to be improving. So therefore, you want the bars to be getting less negative. And when that happens, it's color coded so that you can see the lows are higher than the preceding lows. You can see it's now in an uptrend. It's certainly not in a detrending negative mode where the bars are getting weaker and weaker and weaker and uglier, right? Red. And when the market turns bright blue, it signifies that the stock or this particular product is starting to outperform in its price change in terms of percent move versus the S&P. Now, the theory is that momentum traders and institutions are trying to chase momentum and performance. They want to go with stuff that's outperforming, making money now. So this is I guess you want to call it, or it could be considered a momentum indicator, but it's not. It's showing you that there's positive performance outperforming relative to the S&P 500. That's what this tool measures, the PMC. And this is based on a weekly chart, right? So the higher the time frame, the longer the trend should ensue. If you get into a scenario where the market makes newer highs and makes highs and closes near highs. So basically when we're sitting here on June 7th, and then if we go down below and we look at June 7th, the market's making a high. The following week generates a sell signal, a person's pivot study, PPS sell signal. The volume wasn't really showing tremendous strength. In fact, on balance, volume shows a divergence. Market was making a quasi-newer highs in here, and volume was less than or equal to, and the relative strength, while it had a big breakout, the next bar had a complete, and that again is a weekly chart, went and shared that it was weakening, dark blue weakening. If you're still long the stock, okay, and you ignored a higher time frame sell signal, no problem, and you think the market's going back, okay, fine. But if the momentum of the relative strength gets negative like it did here, and you're still long, you may want to rethink where you should place your stop loss. So until it turns positive, it's not saying that, it could never come back in time. It just means that momentum is not there. Momentum will come into the market, and people will chase the market when they see positive momentum. Now, this is Heckler Mining. It's not a big name. If we take a look at Facebook in this condition, here's Facebook, a bigger name, obviously. And on a weekly chart, as it starts to make newer highs, note that the PMC is making lower highs. In fact, when we made a pronounced higher high than it did the preceding year, so right here, September of 20, and this is the high of 21. A year later, the highs of the relative strength were even weaker, a big divergence. So if you were thinking that this stock was going to go up forever, the market makes a newer high, but the relative strength is showing a divergence. It's showing that the percent change of Facebook is not outperforming enough relative to the S&P 500. And therefore, it's saying this particular stock compared to the S&P 500 is weakening in its performance, and fund managers don't generally like that. So it's an early warning sign of the condition of its percent change performance. So pretty much it's not really a price-based indicator. It's a percent change comparative indicator to the S&P 500. Stocks that underperform relative to the market are going to get shorted or sold or liquidated. Stocks that are outperforming relative to the S&P 500 is more likely to attract new and more fresh money, giving it more positive gains. And that's one of the, I think, phenomenal, amazing aspects of this tool. Until that relative strength starts to turn less negative and starts to turn positive, like it did here, the odds that the stock can go back or at least be dead money for a while remains high. Now, that's on a weekly basis. and you can check that out on an hourly basis and a daily basis. So we started to see even a short-term dead cat bounce. It started to improve. Ironically, for a day trade or swing trader, you saw the market generate a PPS buy with the relative strength showing improvement. Stock rallied. How cool. It had some volume going. Neat. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days later, making new highs, we get a sell signal. And what's the condition of the market? The PMC rating is starting to show more relative weakness. And so if you hadn't figured out, maybe we should throw in a stop there. You're going to do the same cycle over and over again. When Facebook starts to generate another positive buy setup, you want to see increased volume, you want to see relative strength improvement, and you want to be in a buy mode. All right. So I'm not cherry picking any one. I thought I'd use probably the most AMZN. We'll use some of the FANG stocks. Obviously, we've done our homework. Same thing here. Market rallies, PMC not making newer highs, something no bueno. It looks weird, right? So your odds of buying the dip when the relative strength goes negative, it's not a good, it's more of a short, not a long. AAPL, Apple. AAPL, I don't want to do this all night long, but Apple. So Apple's got a little bit of an interesting story. It's not really, no one's liquidating, but you're not seeing anyone run to buy aggressively. And when it does rally, it's not showing significant performance. It's not even showing any volume in this rally either. So bottom line, if your volume and the market's in a strong trend and you hear everyone and their brothers and sisters say, you got to get long this stock, then look at the relative strength, look at the volume and say, gee, does this look like it's getting ready to break out? If it is, then if it's getting ready to break out, you should start to see stronger numbers, not weaker numbers like dark blue, which it's getting into right now. So the PMC is not a fading system, and it doesn't really give buy and sell signals. It gives the condition of the market. If it is in a condition to be bought by its positive performance, or if it's in a condition that needs to be liquidated if long or shorted for trading opportunities if it's in a weakening condition. All right, I hope I was clear on that one. All right, Bo, I have been following commodity ETFs for the past few months. There's a lot of news predicting a slowdown and a recession. Or Nugget, which is an ETF on a leveraged ETF, and I think we just went. So that's more of a, I mean, Bo, that's more of a market-directed question. But if you're looking at Nugget, you're looking at, again, the gold miners. It's a leveraged ETF, and I would teach you this. If you're looking at a leveraged ETF, I always say if it's more for short-term trading, and when you get people look at the overall market or the underlying instrument, which is GDX, the miners, the gold miners ETF. So the Nugget is a leveraged ETF on the movement of the underlying GDX. All right. So if you're bullish one, obviously you would want to look at volume participation on the leveraged ETF, because if people are bullish the market, they want to, and they're bullish immediately, they're going to pile into a leveraged ETF, kind of like IBB and Labu, which is the leveraged ETF on biotech. All right. They have very similar patterns, but one trades more directionally in terms of percentage than the other, because that's where it gets its leverage from. It says 2-time leveraged ETF on Nugget. So you're trading a leveraged ETF. You should be following the underlying market, right? So the condition here is it had a breakout with volume, but the relative strength is not performing tremendously. That's Nugget. So look at GDX and same story there. something's, I think, longer term. I'm a fan of the metals, but we've covered this in our room. Short term, here's the longer term aspect. There's good, stronger volume in OBV. It did break out, confirming the high was good, not a weakening high or a short covering rally, so to speak. The relative strength is outperforming. It's picking up. That's nice. We haven't made a new high, so therefore it's not a divergence. If this made a new high and that didn't, problem. So overall, I'm still longer term bullish on the metals. It's that near term, something is not working or it's in a kind of a pause phase. What could be short term that could cause gold and miners not to work? The first thing would be production costs, input costs. If you're running any kind of mining equipment, you're probably not using Tesla. You're probably using fossil fuel like, a Caterpillar or some kind of a mining equipment. And also your cost of operating and transferring and insurance, everything has gone up through the roof. And if governments or if you're not selling products, your profitability, your profit margins decrease. So therefore, you also want to look at the price of gold if you're looking at the miners. What else can hurt miners? The prospect of people not buying gold, or if there is no more inflation. So with that is the case, that means the market, if we see higher interest rates to quell, tame inflation, that's not good for the metals. Right now, on May 3rd and May 4th, there is an FOMC meeting. It's a 2-day meeting. You might as well don't even care about May 3rd because they don't tell you what they're saying on May 3rd. They make an announcement on the second day, May 4th, 2 p.m., and another worthless press conference. And I call it worthless because Jay Powell, sometimes he likes to answer questions. You watch him blink a lot. And then, when he talks to reporters, it's one thing. And then when he goes in front of senators in his semi-annual Humphrey Hawkins testimony, which he did the last time, he kind of had a different message. So therefore, bottom line, they will explain and hem-haw that inflation's transitory, or we still have risks to the economy. And if it's not COVID, it's Russia, Ukraine, it's this, it's he's stubbed his toe, his dog barked and disturbed the neighbors, and it's affecting the economy. Meanwhile, everything on every planet suggests that economic growth is off the charts, blah, 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 and including in higher wage costs. So anyway, I went on a tangent, and I do apologize for the tangent. But the fact is, from a technical perspective, that's kind of the inputs on what makes gold kind of work. But the technical conditions of GDX and even GLD, and that's what you kind of want to look at as well. If you're looking at a market, understand what you're trading. Nugget is the leveraged ETF off of the gold miners. Gold miners make money when gold goes up. So you want to take a look at gold. And gold somehow isn't showing and demonstrating as much strength as one would anticipate in this environment. Now, there is good volume in it in GLD, the gold miner ETF. And the irony is that the PMC ranking relative to the S&P 500 is still showing strong performance. So longer term, I remain bullish. Shorter term, I think we see a pullback, if that helps you out. And one of the main reasons is, and a really fantastic observation here, as I just pointed out to you a few minutes ago, if a stock or a product makes a newer high and the relative strength is weakening, it says something's wrong with it. You may not want to take a buy signal when there's no follow through volume. When volume is not, I'm not saying it's 100%, but when volume isn't strong and you're going to buy up on a gap higher open and the relative strength is weakening, something no bueno. And so all of a sudden, not a big deal, but from 186 to, in 2-day period, the market went down to 180. So a $6 move, if that works for you, that's how you can utilize the tools together. You cannot look and say, well, I'm going to use the S&P 500. All of a sudden, it went into cadaver mode. It's dead. It's a flat line. You can't compare the S&P change to the S&Ps. And if you say, well, I saw it when I did it with the E-mini S&Ps. Well, that's because they trade at night and the spider doesn't. So yes, it's going to have different performance at night, but not maybe during the day. And since they're two different indexes, percent change on any given 2-minute basis might be slightly different. So therefore, the PMC is comparing percent change of one product to the S&P 500. You cannot use the PMC to measure the performance of the S&Ps to the S&Ps. You can use the PMC to compare the Russell to the S&P, and other index to the S&P. So you can use the Qs, you can use the IWM, the Russell, you can use the diamonds, and can say which sector is outperforming to the S&P, what other stock index. You can use ETFs like transportation, IYT, XHB. You can find out what sectors are relative to the S&P 500 doing better. This is interesting because this is energy. XOP in the last couple of days has been weakening at a double top, and the relative strength is disimproving in the energy. If you take a look at OIH, it's very similar, weakening condition. So it would suggest that there might be a day or two sell-off, and then if it cascades into a higher time frame like a daily, and then you got something else might be coming up. All right. So bottom line, you can use the PMC indicator to compare stocks, sector ETFs, and other indexes to the S&P 500. All right. And then your question on Nugget, and then you had, GRU, it's a gold miner. It's the same story, I think. Export Credit Corp, Public Elements. I don't have any idea what the hell GRU is. In fact, it doesn't look like a whole lot of other people do either. It looks like it's linked to the ICE BO. I don't know if you're teasing me, but it's not a stock of my specific knowledge, but I can only speak technically. On a weekly basis, it's in an uptrend. On a weekly basis, the relative strength's still positive. What this thing is, I don't know, but if that helps you out how to use the indicators to measure its movements, great. The relative strength here, just like it looks almost something linked to energy, but because that's exactly the same kind of relationship the readings of technicals were with this to the XOP and the OIH, ironically. Now, again, let me also teach you something that's very important. If I look at an indicator on a 1 hour basis, a 1 hour basis, a 1 hour chart, 1 hour, and it shows relative weakness, that would insinuate that maybe over the period of the next day or so could be weak. And then I said, see if it cascades in the next higher time frame. What would be higher, 4 hour, or more importantly, daily? If the dailies start to show relative weakness, it starts somewhere. So it'll show up on an hourly basis, then it goes to a daily, and then a weekly. The higher the time frame, the longer the duration of the correction. All right, so a 1 hour might only last for a day or two or three, but a daily might last for 2, 3, 4, 5 days. A weekly could last for several weeks. Monthly, big problems for a longer term trader. Okay, so just remember that if you're looking to buy on a higher time frame, weekly buy signal, for example, and the 60-minute shows some relative weakness, instead of buying the breakout, you probably have odds you could have a potential pullback, and then look for a pullback against some kind of defined support. And one of my favorites would be Person's pivots. Okay. So I think we got Bo's question out of the way, Danny's, Jimmy's, I got Jude's, and I got a James. So we're making headway. Then we have some type-in questions, and let's see if we can answer that. You took the time to type it up. I'll take the time to answer it. Will this PUG be recorded? Yes. And yes, you'll watch it, Danny. We get these are sent out. They're also posted on our website. We, as a courtesy, we send an email saying, hey, it's now ready to review. Click here on this link. Could I describe the details of a PPS mechanical day trading program? Not in the next 2 minutes, John. Bottom line, PPS, the mechanics, I could do it in 14 seconds. It depends on your time horizon. I wouldn't trade GRU on a day trading. It's thin, ... But if you take a look at the /ES on the, this is a 1 minute chart on the E-mini S&Ps. Arrow pointing down is a short, arrow pointing up is a buy. I think you get the point there. How do you figure out if the market's in a trend and it's already weakening and you have a sell signal? You can make sure to maybe lean against the moving averages to place orders against a sell signal and, take prospective profits and trailing stops. And that's something we'd have to teach. All right. But there's a active day trading system there. I need a little bit more information than PPS trading system. What time frame is most effective? And that all depends on your outlook and product you're trading. What instruments? My PPS indicator is effective on anything that moves except for thin market conditions like GRU, for example. All right. Since it's we have different performances on different models. It's not about the sometimes the entry, John. It's about the exits. If you're into taking a trade and holding it for 2 minutes, if you're interested in it, there's a time frame. It all depends on your risk, your stop method, and your exit strategies. Okay, and every different model. I thank you for your question, but it's without more specifics. It can't be answered, sir. All right. Where do you get the JP McClellan oscillator? It's only available on TradeStation with our TradeStation package. It will not work on TOS. TOS has a McClellan oscillator, the Sherman McClellan oscillator based on the NYSE. You would find that simply by going to the studies, add a study, and let's see, we can go to all studies, and I think it's under MIC. Where is it? Maybe it's here. L&M, MIC. Where's the MIC? MIC. MIC. Where in the heck would it be? Good question. I know it's somewhere. If just having a brain fart finding it right second. I'm sure someone could help me out, so I'm less embarrassed. But I know it's somewhere around here. There it is. I got to make the hyper jump. It is under M. Oh, darn it. Darn it. All studies. Go to M. It's the hyper jump. It's one of the biggest issues that we've had with. There we go. Now we got McClellan oscillator. The summation is different than the oscillator. One's based on the NASDAQ, and one's based on the NYSE. If you look at the McClellan oscillator, see where it says those 4 little letters, NYSE? That's the New York Stock Exchange Composite Index. So there is one. It's same story. There's your zero line, and the MIC oscillator is below whatever this is, the ES. You can use SPY, and here is the SPY. That's a 1 minute chart, though. Let's look at the daily chart. And as you can see, it crossed on the NYSE slightly above, but looks different than, again, if I typed in SPY, if I type in QQQ and hit enter, it looks the same, because remember, on the McClellan oscillator, or the JP MIC oscillator, just to prove a point, on the Qs, it was below the zero line, and the futures on the SPY is above, as so is this, as is the NYSE. But we ain't, if you're trading the Qs, you ain't trading the NYSE. So therefore, you can use it if you want to consider that. Generally speaking, it's an index. Stocks, they generally tend to go up sort of together. That's not necessarily true over the last 2 years or to the same degree as we found out based on the NASDAQ last year relative to the Russell. Big time differences. So anyway, that's what you need to know. But you asked, is the McClellan oscillator available? And on there it is. Okay, that does conclude our time, everybody. I actually went over by 2 minutes, and we're going to get the recording out. I thank everybody for your attendance, and we look forward to doing this next month. Again, that's it. The video recording will be posted of this event, and we'll send you an email. Thank you very much. God bless, George Volley. Thank you very much, Michael and John, for your questions. Ram, I couldn't get to you. Analysis on TLT, that's market and not indicators, but we'll try and just you come into the live trading room. We'll try to get some questions answered there. Thanks, everybody. Have a great evening.